The beginning of this year has been a tale of two markets. We started out with a very, very weak first quarter. Second quarter picked up and was encouraging. But early numbers now that I'm getting in, just in the beginning of July here, we're seeing a little pause, let's say, in the summer market, unlike what we experienced last year, where it got active during the summer market. But yeah, we're expecting a pause during the summer, and we're setting the stage for what we think will be a busy fall market and a fourth quarter type of thing that we're anticipating that will be a very positive market for us. Real estate is always driven by political and economic factors, right? So right now we have two wars going on around the world. We have tariffs being leveled against Canada. We have a fundamental restructuring of Canada as we know it. There's just everything we knew how Canada operated before is being changed as an offset to those things. So I think these have hit us much deeper than we anticipated, and it's now we're struggling with. Now, on a positive note, one of the factors I always look into is one of the guides is the Bank of Canada interest rate. This week, again, they held it at 2.25 on Wednesday, which was yesterday. Employment's down slightly by zero point 0.1 percentage points. And I know some of this we go, yeah, but that's not going fully where we need it to go. But in a market that's as, how should I say it, as uncertain as what we're going through, where everything is changing, you look to what are your safe areas. And if they're showing stability, it provides encouragement. So employment down slightly, 6.5. And one of the things that's starting to encourage me, and I've been saying that to our agents, is when you see companies come into the marketplace, as we've seen in Toronto, Jesta from Montreal coming in and buying 1,000 units for $500 million, that's a big signal that we're at the bottom of this market or around the bottom of this market when you see big financial players coming in and investing that kind of money in the Toronto market. I think there's optimism for the fall markets, as there typically is, and I think there'll be reason for that. We're seeing, Mississauga home sales, they're up 7.3%. New listings are down. Average selling price is down 3.9% in our marketplace. So that's encouraging because we expect that the trend will continue with home sales increasing, new listings dropping, and inventories diminishing. And as that'll put more pressure on the markets as we go forward into the rest of this year. So I think there's a lot of pluses to Mississauga. Having grown up here, I was in Mississauga before Mississauga was even a city. We moved here in '67. And there's a benefit and a convenience to this city. The proximity to the GTA. We're a bedroom community next to Toronto, which is perfect for commuters working in the GTA, students having access to the Toronto universities and college, higher average family incomes. So we also have, over the last couple of years, developed a strong industrial and commercial base that continues to grow and flourish. We have UTM, University of Toronto campus here. We have the airport, Toronto Pearson is in Mississauga. And these things individually may not mean a lot, but in combination with everything, it does. And I think that's why you'll always see stronger prices in the Mississauga area. We're the first to be impacted when they go down, and we're the first to be impacted when they go up.